Hello and welcome. You're watching Markets at Noon. Well, let's get in Ashwini Kumar Tewari, the MD of SBI, to understand his take on what does he make of these RBI announcements. Sir, what's your take when it comes to the decision? The market was already anticipating that there wouldn't be a rate cut this time around, but how should one look into this change in stance to neutral that has been done?
So change of stance neutral means the RBI is now thinking that the data on inflation, on growth, on international situations, all of that is kind of overall aligning to see that the rates can be brought down. And if the risks which were pointed out in terms of geopolitical risks, inflation and others, they do not materialize, then the rate cut may happen sometime closer in the next 1 or 2 quarters. So that's the indication what we think is there.
And sir, what are you expecting? How much of a rate cut can it be in the next quarter? Even are you expecting a rate cut in the next quarter?
No, our house view is because we have the chief economist and his team, is that the rate cut is likely sometime in the January-February period, not in the December period. However, we'll have to wait and see how the data for GDP growth comes out in this period up till December.
Okay. What's your also, if you could just tell us what's your view on the inflation? It has remained sticky for a long time. RBI has also increased their forecast for the third quarter of FY25 in terms of inflation. How are you expecting these numbers to play out?
So food inflation has been uncertain in the recent past because of various reasons, including the cropping and the climate effects, rainfall, etc. Overall, it is under control. So yes, that has been flagged as one of the risks by the governor himself, and therefore, earlier also he has said that the last mile of inflation, which is now that we are below 4.5 to 4.5 to 4 journey, is the most difficult journey. So hopefully all these factors will continue to remain under control, and as we trend downwards towards 4%, and as the other central banks have already cut rates, I think we are looking at a situation where the inflation should be in the bound closer to 4% and leading to for conditions for rate cut.
Good afternoon, Mr. Tewari. This is Cheryl also joining in the conversation, and the government has highlighted certain NBFCs chasing excessive returns on equities. Rather, I'll stand corrected. You had the RBI governor who actually mentioned about that today itself. So what's your view on that? Is there any NBFC at risk according to you?
No, clearly the RBI keeps auditing various NBFCs and looking at their numbers and growth. And since the NBFCs have been the leading players in unsecured loans and also gold loans, which are secured, but also used for consumption purposes, therefore they have the RBI has a better view on how these different NBFCs are faring. So in our view also, this warning is very prescient and very timely, that if any NBFC is showing a large growth consistently in the assets under management, the risks could be building up, and that is what the governor has kind of told the NBFCs, that you should grow only after you have a sustainable business model and also a proper risk management framework in place to be able to handle the growth and its implications. And those who don't have such systems, and there are those who may be chasing growth because they have raised a lot of equity, I think those are the ones the government is warning about. I do not know what specific NBFC is referring to, but clearly it's good that the regulator is cognizant of this fact and is warning them, and with their individual conversations with those NBFCs, I'm sure those necessary steps are being taken.
Right. Point taken on back of that, what the governor meant for the NBFC sector. But you've seen the credit growth in the unsecured lending that has actually come down. Now with no rate cut, you have the festive season that is ongoing. How do you see this number coming up? What's your projection when you talk about the credit growth in the unsecured lending space?
So credit growth has been doing well. It is, of course, from the highs of 16-17%. From there, it has come down a little, and especially in the unsecured segment, because with the RBI's restrictions in terms of provision, etc., on unsecured loans, and also on the NBFCs, every bank is now more careful, and therefore are pricing it appropriately and not lending easily to the lower rated NBFCs. So therefore, in that sense, that segment has slowed down a little. which is what I think the regulator also wanted. Overall growth rate, though it has come down a bit, but I think we're still seeing strong growth, especially in the infrastructure space, in the renewable energy space, etc. So I do not think that we have had a slowdown coming in credit growth at the moment.
Well, thank you, sir, for joining us and for giving us those details and for putting things into perspective.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.